It's what everybody's thinking about on Wall Street, and that's all they freaking care about. We've got to get clarity there. If we can get clarity there, the stock's going to have a huge recovery. Now, if we don't get clarity there, we're moving lower, and we're going to likely almost for sure be under 200. Also, want to get more clarity on what they're thinking for production capacity for 2024, and also what they're thinking for vehicle pricing for 2024 as well. So these are the big questions, and so you're going to see the much bigger move with Tesla stock actually after hours based upon what the management team, Elon Musk and those guys say.
And we justify an elevated multiple.
Ooh, here we go. Tesla. Hold your horses.
Release in overtime. That stock's been under pressure, on track for its longest losing streak now since 2016. This amid ongoing price cuts, shrinking profit margins, and slowing demand alongside increased competition. Joining me now here Post 9 to discuss Wedbush's Dan Ives.
There he is.
Welcome back.
Great to be here.
Look at that outfit.
I'm not
Look
sure
at that
you
outfit.
heard Brent Talkington a moment ago, a shareholder, big believer in Elon and Tesla, and yet she says the most important thing she's watching is all about Elon. Not pricing, not margins, not market share, not this, not that. It's all about Elon.
Look, I mean, he definitely, you can't put the sort of issue back in terms of what he talked about with AI, 25% ownership, and that's definitely caused some nervousness out there. And that'll be something I expect him to sort of reiterate, that he's committed to Tesla. He's not going anywhere. I think that's something that's important on the conference call to hit. But no doubt, the margins, the price cuts, that I think is front and center for many investors.
Okay, so let's take those. Margins, are they going to be hurt by more price cuts?
Look, I mean, we believe coming in that 95% of price cuts were done. They've continued to cut prices.
You've told me that like 3 appearances ago.
Yeah, and look, the problem is that as they continue to cut margins, last year it was the right move. This year, you got to hold the line. I think you could have around the edges some price cuts. They need to draw a line in the sand that the vast majority of price cuts are done. You're going to have a sub $30,000 vehicle, we believe, over the next 12 to 18 months. And I think that's the important thing. You cannot keep giving away that margin advantage. That's the important thing that we believe they ultimately do lie in the sand this quarter. And I think that's something that the street's focused on.
He's in a price war with the Chinese.
Yeah,
right?
He
he's
is.
already losing.
100%.
Has lost the lead.
He's in a price war with himself,
so where does
too.
this go from here?
I mean, look, in China, this was a record quarter for Q4. So the one thing is, from a demand perspective, that poker move is paid off. I think now when it comes to Tesla, the focus is 2024, you can't continue to cut prices. And I think if margins start to trough, and they talk about that and upticking from here, I think volumes 2.1, 2.2 million, then at that point, I think the bottom is in for the stock.
What if the new reality here is just lower priced vehicles from Tesla going forward? And that's just the way it's going to be. Because in an environment of slowing EV uptake, I think it slowed more than people thought. Yeah. Now he's in this battle in China with the competitors there, that there's no other option.
Yeah, and look, and I think for the recognition now, you've definitely seen Bloom come off the rose for overall EVs. We've seen that globally. But the question is, do you want to own a Tesla or do you want to own an EV? I still believe they continue to own the market along with BYD. But now you really have to hold serve in terms of what's happened from a price perspective, because this is all, in my opinion, the reason that we're long-term bullish. It's just the start of the next phase of the Tesla story in terms of autonomous, FSD, the rest of the Tesla story. So we are going through. I view tonight, it's a moment of truth. I think it's going to be a moment. It's a moment of truth around margins. And I think investors' frustrations built. We've seen that especially the last
You use that a lot, the moment of truth. I mean, maybe investors are getting sick and tired of waiting for this. And why also has the stock over the last 3 earnings reports the day after traded down near 10% in each occasion?
Well, it goes back to the last few quarters. You need good communication on the conference calls. Last conference call we talked about, it was a disaster. We talked about those moment of truths, but you haven't had the inflection point. And even though the stock worked last
Shaheen,
year,
you know it,
this is
baby.
important
You know
for the
it.
next phase of the Tesla growth story. You need adults in the room. I expect Musk to step up tonight, and I do view this as an inflection point rather than the start of a negative cycle.
You've had to, on occasion, like anybody else, whether it's us in the media or investors or an analyst, decide what he says in certain occasions is like legit. Like, should I take him at face value, or is he just throwing something out there on social media, like the 25% thing? What am I supposed to think about that?
So I think the 25%, I mean, and we talked about it, it's something where it's an issue from an AI perspective in terms of a big part of the Tesla story. But right now, for investors, you don't want to see
Flirting with
Musk
206,
adding
flirting with
uncertainty
206.
and some sort of issue with the board. And that's why I think that's a little more talking rather than action. But that's why it's when he talks to investors, he needs to lay it out in terms of I'm here, I'm committed. The price cuts was a 2023 story, not 2024. We're gaining share. China's strong. If that happens, then this is a stock that starts to significantly reverse from here.
The elephant in the room, I suppose, at this point is the future of Twitter. What happened? Do you think he's going to have to sell more shares in Tesla?
I don't think he's going to have to sell more shares. I do think he's going to get outside capital to ultimately build X into a super app.
X, I keep forgetting X. You don't think you think he's done selling Tesla stock to deal with any, debt-related issues with X?
I think for now he's done, and if he needs ultimate capital, that would be outside capital. I think that black cloud is more in the rearview mirror.
Okay, let me ask you about two other things you cover. One is Microsoft. We mentioned, I'm gonna look at it right now.
Before we go further here, I want to hear from you guys in the comments. Do you think Tesla's going to beat earnings or miss earnings? Do you think they're going to beat or miss? Let me know in the comments section while we're listening to this. I'm looking forward to seeing if you guys are confident they're going to beat or they're going to miss these analyst projections. Okay, so it looked like a lot of you guys are thinking Tesla's going to miss. So that's kind of somewhat good news that I think people are going in worried, scared, bearish. And to be quite frank, if we look at the 1 month, year to date for Tesla, look at this year to date. Tesla's done 16% year to date. I mean, people are going in very bearish on Tesla here for these earnings. And so if there's one thing that might give you a little comfort, it's, the expectations are really low for Tesla. A lot of people are already thinking they're going to miss earnings. They're not going to hit their numbers. And so a lot of people have already sold out of their stock. Doesn't mean we can't see another wave of selling, but a lot of people are already sold. We did hit 206, huh? Yeah, we hit 206 just for a second there. This should be an interesting last bit of time here before the market closes. Now, looking out there in the universe outside of that, I mean, it looks like a little more Red Dead Redemption here today than green. The Planet's having a really good day, 5%. Meta's having a really good day, 1.5%. Wind's having a good day, JWN. Baba continues its upward moves. Texas Roadhouse green, Amazon green, Avant slightly green. But then you got Fubo's got a pretty red one here today, 3.5% down. Palantir's pretty red as well, 3%. PayPal's having a tough day, 2.5% down. So I would say today's a little bit more of a negative day than a positive day. And I think a lot of it comes down to fears around Tesla. Tesla sets so many vibes for the market. And if people are worried about Tesla, they're worried about other stocks in general. And, if Tesla moves down big, it just kind of like zaps all the air out of the stock market and creates more of a people don't want to take risk type scenario, right? On the flip side, if Tesla rolls on these earnings and we go flying, I mean, that's going to totally set a new precedent in the market in terms of taking risk on. Tesla's just I think it's the most important. I think it's the most important stock for investors judging risk on, risk off. When Tesla's doing great, people feel very confident taking risk in the market. They're feeling FOMO-y. They want to buy. When Tesla's not doing good, they're much more cautious. They're like, it's the number one stock in the market, in my opinion, that really sets the vibe of the market. It matters more than Apple. It matters more than NVIDIA when it comes to setting those vibes of the market. And, people feeling, do they want to take risk or do they not? Because some people look at, a stock like Apple nowadays, they don't really think about it as risk on, risk off. A lot of times they think about it as safety. many times Apple nowadays, because they're like, oh, they're going to, somebody's iPhone's going to break. They're going to go buy another iPhone. Like, their business is just solid. They got the services revenue that just keeps recurring all the time, right? So, just kind of a little food for thought. Okay, so I want to go, where I want to go real quick here? I want to go to Seeking Alpha and pull up the earnings estimates here for Tesla so we can remember all these numbers. So when the numbers hit, we're going to have these numbers in mind so we can remember them, okay? So keep these numbers in mind here, folks. I need to go to quarterly. All right, keep these numbers in mind. 74 cents EPS is what analysts are expecting here. 28 analysts, 74 cents. On the revenue side, they're expecting $25.76 billion. So keep those numbers in mind right there, okay? Now, those aren't even the most important numbers, by the way. The most important numbers are going to be around margins. And not just margins for this past quarter, but margins for future quarters as well. So keep that in mind, folks, okay? So those are what you got to keep in mind here in regards to this Tesla earnings here. I also want to get up Tesla's IR page here. I'm going to get that all ready to rock and roll. So as soon as those numbers drop, we can see everything. The production delivery numbers, if you guys haven't seen those, in the past quarter, 476,000 Model 3 and Model Ys they sold. As far as delivered, 461,000. Other models only produce 18,000. So think of that as obviously X and S, right? Over time, that's going to be Cybertruck big time as well, right? But they did deliver almost 23,000 other models. And only 2% and 3% were subject to lease accounting here. So not a very large number at all in terms of amount of people leasing them. Which, to be quite frank, does it make sense to lease a Tesla right now? No, I think it makes more sense to buy. I don't think you're going to get Teslas cheaper than like, if somebody I knew asked me, should I buy a Tesla now or wait a year or 2 years? I'd say, get it now. Between the tax credits and on top of that, the prices being so low, like, I don't foresee them having prices lower at this time next year. Plus, the whole tax credit situation might not be the same at this time next year either. So, like, yeah, right now is one of the most attractive times, I think, to buy a Tesla. And then, if somebody wanted to refinance, let's say they bought it on a loan, they could always refinance down the road, right? So, in terms of 2023 in general, the company had production of a little over 1.8 million, vehicles. And deliveries of a little over 1.8 as well. So their production actually outstripped their deliveries by, 37,000 or so, roughly, 37,000 vehicles. So something to keep in mind there, okay? Okay, let's see where we're trading at. Still clinging on to that 207 range here, going into the close. We only got a few minutes left here before the market closes. Somebody asked, when do you think the Tesla bot will affect the stock price? How many years out? Oh man, I so many years out, I wouldn't even factor it in right now. They've got to make a lot more progress before people can even start getting excited in regards to that Tesla bot as of right now. So, yeah, we're way. Somebody says it's going to 175. Oh, don't tease me. Don't tease me. Please don't tease me. I would love Tesla to go to 175. Oh my gosh. It'd be like a dream come true. Tesla hits 175 tomorrow. Oh.
All right, we'll see you in overtime. See what happens there, as we will with Tesla, Phil.
Scott, four numbers we're going to watch for. First of all, is the earnings per share. 73 cents a share is what the street is expecting. That's not going to be the big driver here. It's gross margins, automotive gross margins, excluding zero-emission vehicle credits. 15.7% is the metric, the number to focus on. There you see free cash flow. One other number, what do they say about delivery guidance for 2024? The expectation is 2.1 million vehicles will be delivered this year. Do they give us a number for guidance, or do they give us we're always shooting to increase by 50%. Some years we'll make it, some years we don't. We'll see in a couple of minutes when Tesla reports its results.
We'll
Scott,
see
back to
you.
you.
Yep, Phil, thanks so much.
In order to make investors
Ooh, Tesla pushing down 202, 202.
Well, it is a good question, John. I don't think the results right now have to be that dramatic because we're still very early stages, like IBM, for instance. It's really a question of they've got the technology and the software combined at this early stage. A lot of people need help, with the implementing the tools of AI. So their consulting business, should be helped. And it's a question of what they see for next year. And of course, consulting's lower margin than their software. And ServiceNow has so many different
Numbers are out.
Platform. They're expanding their services. They are incorporating AI into all their different offerings, but the first time they had a full
numbers are out
doing that was the fourth quarter. So again,
200. It might. Oh, it just broke 200. 199. 199.
That they are seeing from their customers how quickly the adoption is going to happen, and that's going to be important because obviously IBM is up over 20% in the last 12 months, it's near its highs of 10 years ago, and ServiceNow has been ripping as well. So it's really about the speed of adoption, and I think, for instance, that's why I've seen NVIDIA go bonkers because their rate of
automotive
growth
revenue is only up 1% year over year.
The next few quarters, and it's getting rewarded for that.
So if we shift from digital infrastructure to literal physical infrastructure,
service is up 27%. That's good.
And it looks like a beat on both the top and bottom lines here. EPS coming in at 45 cents a share. That was a penny better than estimates. Revenue $3.68 billion. That was also
EPS down 40%.
Operating income $1.32 billion. If you look at volumes for the fourth quarter, total volume,
non-GAAP 39% down.
Million units. So that was an increase of 1% year over year. Merchandise volume up 3%. Coal up 3%. But intermodal volume flat. Operating ratio 64.1%. That was a little bit higher than street expectations.
Operating margin 9.2%
for the railroads. But in general, even though the stock's trading about flat right now, it was a beat on the top and bottom lines. Also, don't miss my exclusive interview with CSX CEO Joe Henricks. That'll be tomorrow in the 10 a.m. hour.
Operating margin went up.
The street. So, Mike, if I just go to you here with this, I mean, transports have
just
been
the
weak
EBITDA margin down
15.7%. Some of that's airline related.
Yes. I think that's in line with Wall Street.
I'm going to interrupt myself and go to Phil because Tesla earnings are out. Phil.
Should be in line. Margin.
Morgan, we have a miss on the top and the bottom line by Tesla. The company earning 71 cents a share. The street was expecting 74 cents a share for the fourth quarter. Revenue coming in a little shy of expectations at $25.17 billion. The street expecting $25.61 billion. We're just starting to go through the numbers right now. We're going to see if we can find out what the automotive gross margins were.
I think it was 15.7.
Excluding zero-emission vehicle credits. Remember, the metric, the number that people are looking for, 15.7%. I
think that's what it was at.
Estimate among analysts. If it's below 15.7, probably puts more pressure on shares of Tesla. If it's, let's say it's above that, let's say it comes in above what it was in the third quarter, which was 16.3%, then you could see perhaps the shares bouncing back a bit.
Adjusted EBITDA margin,
15.7. Bottom line in the fourth quarter,
right
71 cents a share. The street was expecting 74 cents a share. Guys, I'll send it back to you.
Okay, Phil LeBeau, thank you. Mike, I started with the transports. I'm now going to shift to Tesla since it is the first of the Magnificent Seven to report. We're still waiting on some of those key metrics for the name, but in general, the fact that we have a miss on the top and bottom lines, shares under pressure, down about 5% right now. Initial takeaway.
Yeah, and it seems like at least at first glimpse, not a lot of reassurance about current run rate or 2024 delivery. So the market was pretty well kind of aware of the risk to the downside here. That's why the stock very conspicuously within the big seven of the NASDAQ has not been trading particularly well. We'll see if it has, again, coattails. It might not really have to. It's kind of its own story in terms of its own demand flow. So do want to see more of the detail. But at this point, the market's kind of taking it at face value. But then the stock, again, is already discounted. Not a wonderful quarter.
Barbie, in overtime, Tesla trading below $200 a share. It hasn't done well year to date. It's down a little bit more than 16%. Does it matter for the overall market? I mean, there's talk, Jim Cramer's talking about it being booted out of the Mag 7 and favor.
Outlook. This part's important. Our company is currently between two major growth waves. The first one began with the global expansion of Model 3 and Model Y platform, and the next one we believe will be initiated by the global expansion of the next generation vehicle platform. So that's the Model 2, let's call it, okay? In 2024, our vehicle volume growth rate may be notably lower than the growth rate achieved in 2023. Ooh, that's a big statement. As our teams work on the launch of our next generation vehicle at Gigafactory Texas, in 2024, the growth rate of deployments and revenue in our energy storage business should outpace the automotive business. Oh man, this conference call is going to be huge, guys. This conference call is going to be freaking huge. There's a lot of questions here. Because even a question of like, well, when are we looking at this next generation vehicle? Is this something in the next year or in the next 3 years, 5 years? What are we talking? Cash, we have sufficient liquidity to fund our product roadmap, long-term capacity expansion, and other expenses. Furthermore, we will manage the business such that we maintain a strong balance sheet during this uncertain period. Profit. While we continue to execute on our innovations to reduce the cost of manufacturing operations, over time we expect our hardware-related profits to be accompanied by an acceleration of AI, software, and fleet-based profits. Product. Cybertruck production and deliveries will ramp throughout the year. In addition, we will continue to make progress on our next generation platform. So heavy commentary about next generation platform here. Mentioned, 3 times? Next generation platform, next generation vehicle, next generation vehicle, next generation platform. Clearly, Elon's really shifting the focus toward whatever is going to be like the Model 2. Let's just call it that. So, okay, let's hear what they're talking about here, and we'll keep rolling with this.
Long time representing excitement. So what does it mean?
Coming back a bit, I think it's a next generation vehicle.
Tesla. I think that's pretty clear. You've had two.
It's over for Tesla?
Right now, and who knows if it revives, but the EV market is stalled out for now for a variety of reasons, whether it's lack of incentives, prices, have had to be cut in order to move.
She said it's over for Tesla.
And Tesla is still, the stock is still at a 63 PE, and they don't have any new models coming out this year. I mean, we're waiting for the budget model, but when you have to cut prices to move inventory, you've got a problem. That's a fundamental problem. So I think the stock can go lower here.
Wow. Best-selling vehicle globally in 2023.
Because IBM earnings are out, and the non-GAAP gross margin 82%. Versus 80.6 expected. Current remaining performance obligations at CRPO, think of that as revenue in the pipeline not yet recognized, 8.6 billion versus 8.4. Now for Q1, ServiceNow guiding to subscription revenue. This is not total revenue, it's subscription revenue of 2.51 to 2.515 billion. That's 2.5125 at the midpoint. That's better than the 2.46 expected. And now for the full year subscription revenue, the guide is to 10.555 to 10.575 billion versus consensus at 10.4. So I did have the chance to talk with ServiceNow CEO Bill McDermott about these results. Here are some highlights. He told me, what's so cool is we're not just hitting the guide, we're beating.
So now, by the way, guys, in regards to Tesla stock here after hours, you see it all over the place, 197, 203, whatever. I'm telling you, the big moves are actually going to happen on the conference call that we're going to listen to here in just a bit. When the conference call gets rolling, because we have so many unanswered questions. The earnings don't even answer the big questions. No one really cares about, honestly, most of these numbers we're seeing here. They all want to know, are margins troughing in the next 1 to 2 quarters? It's what everybody's thinking about on Wall Street, and that's all they freaking care about. We've got to get clarity there. If we can get clarity there, the stock's going to have a huge recovery. Now, if we don't get clarity there, we're moving lower, and we're going to likely, almost for sure, be under 200. Also, want to get more clarity on what they're thinking for production capacity for 2024, and also what they're thinking for vehicle pricing for 2024 as well. So these are the big questions, and so you're going to see the much bigger move with Tesla stock actually after hours based upon what the management team, Elon Musk and those guys say in regards to this.
Is we're not just hitting the guide, we're beating the guide.
We're going to go back to Phil LeBeau, too, because we have more headlines out of Tesla. Phil.
The 15.7 number.
And Morgan, we've got the good, the bad, and the ugly. You want to know why shares are under pressure? Well, you've got a miss on the top and the bottom line. We talked about this right a few minutes ago. They earned 71 cents a share. The street was expecting 74 cents. Revenue coming in light of expectations at 25.17 billion. And there is some commentary about their volumes or deliveries for 2024. They are not giving guidance. And then they also say that while the vehicle volume growth rate may be notably lower than the growth rate achieved in 2023, as the teams work on the launch of the next generation vehicle at Gigafactory Texas. Bottom line is, you don't know if they plan on delivering 2.1, 2.2, how many vehicles next year, just that it'll be at a slower rate than it was in 2023. There is some good news if you are a Tesla investor, and it has to do with automotive gross margins excluding zero emission credits. That's the credits that they sell to other automakers for building EVs. That margin rate was the expectation, 15.7%, came in at 17.1%. By the way, that's not only better than analyst expectations, that's also an increase from where they were in the third quarter when they came in at 16.3%. So a little bit of good news there if you're a Tesla investor. Now it comes down to the call, guys, coming up at 5:30 to see what Elon Musk has to say about the outlook at Tesla. Back to you.
Yeah, and he tends to not disappoint in terms of adding some flesh to the bone. Phil LeBeau, thank you. Barbara, I'm going to go back to you for those additional details on Tesla. Gross auto gross margins, ex credits coming in better than expected and an improvement sequentially.
That is a pleasant surprise, I will say that.
Well, it is interesting because gross margins, it could mean that gross margins troughed in the third quarter, which they were at 16%. But I don't think it says much about pricing. I don't think they have the pricing power right now, but it could be about supplies, the batteries, lithium, the prices, the costs have come down. So
Service now went negative.
Cutting there. I know they've paused some production. So I think we do need to hear on the 5:30 call which part it is. So I think it's more likely some cost cutting there.
Okay. Barbara Duran and Mike Santoli, thank you both for kicking off the first 20 minutes of programming.
Ooh, baby, this is going to be crazy. This conference call, guys, is going to be nuts. Nuts. Somebody asked if I'm going to be live streaming other big earnings over this earnings season. And yes, for instance, Meta, Amazon, maybe Palantir, we'll see, PayPal. So yeah, I'll be doing any of the big dog companies that I probably talk about a lot. I will be doing live streams for those companies as well. Now, looking at these numbers overall, so we came in at, as far as automotive sales, 20.6 billion. That's versus 20.2 in the same quarter last year. Total revenues, 25.1 billion versus 24.3 billion. Look at gross profit here, 4.4 billion versus 5.7 billion. So that's where we got hit. Gross profit down substantially, obviously, year over year. About $1.3 billion to be exact. No bueno. Total automotive cost of revenues, look at this. It went from 15.7 to 17.4. Big difference there, right? Now, research and development, they did increase R&D quite substantially to about $1.1 billion from $810 million the same quarter last year. So clearly, Elon has the Tesla team working on a lot. Let's just call it that. SG&A also increased quite a bit from about $1 billion to 1.2, almost 1.3 billion there. So income from operations fell by nearly 50%, guys. We went from about $3.9 billion in income from operations the same quarter last year to just over $2 billion of income from operations in this latest quarter. So, not ideal, obviously. And we all know this is what was going to happen, but it's just like to see the concrete numbers is pretty depressing when it comes to that. Net income for the company came in at, it was 3.7 billion at this time last year, and then this most recent quarter we came in at 7.9, but that is because of this provision benefit from income taxes added 5.7 billion to the number. So don't get excited about that number because you take about that 5.7 and you're at like 2.2. So net income at like 2.2 billion versus 3.7, right? And you could say income from operations probably matter more. So 3.9 to 2. That's a big decrease. Now, some positive stuff here. You want to talk about some positive stuff, folks. Look at this. Cash and cash equivalents and investments for Tesla is up to it's approaching $30 billion, folks. Oh my gosh. We got money coming out of our ears. Look at that. From $22 billion at this time last year to over $29 billion in cash equivalents, and investments. I mean, you want some positivity? I got some positivity there. Oh my gosh. Woo! I mean, I still remember when Tesla was a bad balance sheet company, and now to be seeing this company sitting on nearly $30 billion of cash equivalents and investments is just ridiculous. It's the best balance sheet by a mile in the auto sector. No one in the automotive industry can hold any sort of candle to that's a big player in the market. Ford, GM, Volkswagen, Toyota, look at all those guys' balance sheets, and then look at Tesla's balance sheet. It's a night and day difference. $108 billion in total assets for the company now, total liabilities of $43 billion, so that's $50 billion in the plus stockholder equity. I mean, woo! You just can't touch that. You can't touch that. That's insanity. Pure insanity. I mean, what? Debt and finance leases, what is that, $2 billion? $2.8 billion? I mean, gosh. The balance sheet's sickening. Sickening balance sheet for Tesla. Unbelievable. Woo-wee. Oh, here we go.
Tasha Keeney and former Tesla board member Steve Wesley. Good afternoon to you both. It's good to have you guys here to break this down.
Cheers.
Tasha, I'm going to start with you because it does feel like a mixed bag here. We had the misses on the top and bottom lines. We had the lack of details in that 2024 guidance, just the warning essentially that it's going to be slower in terms of deliveries. But the flip side of that is the auto gross margins, excluding credits, at 17.1% was better than expected and represented a sequential increase. Your thoughts?
Yeah, I do think, it's important to note gross margins, automotive gross margins, ex credits did tick up. And I'd say, broadly, the picture here is the future is really electric vehicles, right? We already know that. Other traditional auto manufacturers are actually cutting back on their electric vehicle plans and programs over the next 5 years. And they're not as profitable on those platforms as Tesla is, because Tesla's still the leader in EVs. I'll also say that for the future, we're very excited that Tesla is investing in AI, that they're focusing on the next generation vehicle platform, because we think that robo-taxis, that autonomous driving is completely going to change Tesla's business model. I think that could push overall gross margins up to north of 50% over the next 5 years. And I'm looking forward to hearing more about that on the call.
Okay, and I've heard you talk about that as well. We've heard him talk about that. Steve, I want to get your thoughts on some of the commentary we've seen in this release actually about AI. And specifically, it
she
says
looks like
here
AI.
That while they continue to execute on innovations to reduce the cost of manufacturing and operations over time, they do expect hardware-related profits to be accompanied by an acceleration of AI, software, and fleet-based profits. Is this something we've been hearing along the way too, or does this represent a ramp up in the rhetoric on AI?
Well, I think it's just part of Tesla's story. And look, Q4 results are a tale of two cities. Tesla posted record $25.7 billion in Q4 revenue. It's going to be roughly $97 billion for the year, and they sold 1.8 million cars. That's whopping 55% of the U.S. auto market. That's not a bad year. But the big picture is growth has slowed from 51% year over year last year, 19% year over year this year. So the big story is BYD is coming on quickly. They will likely pass Tesla next year as the dominant EV seller in the world. So right now, Tesla is still number one, but they're going to have to find a higher gear to stay on top. The AI story is part of bringing costs down. The robo story is another part. And there's also Tesla's rapidly growing energy division. So these are all part of the picture.
That's where actual nice growth is at, guys.
To keep an eye on. Yep. Get ready to see the big smackdown, Tesla versus BYD for global dominance in the EV.
I'll grade the Tesla earnings in a few minutes here. I'll go grab my iPad and I'll grade that up for you guys, but hold on.
Or what kind of a multiple does Tesla deserve? Because it's still very richly valued for right now. And
it always will be, sir. It always will be.
For any time soon. I'm not even sure that means people buy more Teslas if they can just rent them and if that's actually good for the company overall. But how do you calculate what kind of valuation?
By the way, in the chat, guys, let me know, are you happy with these earnings? Are you not happy with these earnings? Or, let me know what you guys kind of think about the earnings. Do you think they were kind of what you expected? Meh? Let me know.
It deserves right now, given a lot of other companies are pulling back their revenue expectations and getting dinged.
Very frustrated, not horrible.
So first, I'll say on robo-taxis, I mean, I'd encourage everyone to look at the videos online that are coming out of FSD, full self-driving version 12. It's amazing. It drives like a human. People are doing full drives, zero interventions. So the fact of the matter is, robotaxis are already possible today, just in select
As
areas.
expected.
I'm not saying
It's
it works
good.
everywhere,
Okay.
right? But we have evidence that it's possible. We see other companies like Waymo also telling us that it's possible. But Tesla itself has great technology. And when we think of scale and the number of cars
Just
that they're
growing
producing,
pains. That's a way of putting
to put
it.
this in perspective, the data advantage that Tesla has is orders of magnitude higher than other players. Tesla is collecting or is able to look at data from more than 2 million miles per day of customers driving in full self-driving mode. That compares with other players like Waymo that, they might have collected single-digit millions in the lifetime of the project.
Wow.
So again, I think robotaxis are already here. Don't miss this opportunity. And again, I'm looking forward to hearing more about that rollout plan on the call.
Okay, so Steve, is this an Uber moment for Tesla or an Apple moment? And I separate them this way. When Uber was getting ready to IPO, there was all this talk about autonomous driving, being a bumper to their valuation. That didn't really go anywhere. But then at the same time, you talked about BYD versus Tesla. There used to be talk 10 years ago about, Samsung's going to kill Apple's margins because it's just, a black rectangle. Where are the margins in that? And Apple managed to outpace the competition. So which is Tesla?
I think it's Apple. And look, I think
100%
autonomous
Apple.
vehicles, robo-taxis are a big deal 3, 4, 5, 10 years from now. But the big picture now is the whole world's going electric. Someone earlier said, electric sales are slowing. Nonsense, grew 33% globally. I think they'll do at least that this year. Here's the big picture that investors need to look at. Tesla dominates the U.S. market, which is 15% of all vehicles sold in the world. They dominate the European market, 17% of all vehicles sold. By the way, Tesla's Model Y,
the
single
FedEx man's running with his packages.
On the planet,
good for
gas
him.
Or electric.
Go
Those are huge
FedEx,
accomplishments.
go.
It's a powerful brand. The fly in the ointment here is China is today 32% of the global market, and BYD has managed to show up a very attractive family of cars in the $15,000 to $30,000 range. And the big growth markets globally in the auto industry are no longer the U.S. or Europe. It's places like India, Southeast Asia, South America, Mexico.
100%.
That's why Tesla needs to kick things into gear, get their Project Redwood $25,000 car into market by 2025 and in mass production by 2026. If they do that, they'll be in great shape. For the next 18 years, they're going to have to make do with an updated Model 3, new facility being built in Mexico and Shanghai. And don't forget, they have an rapidly growing energy division. They've just got a lot of pieces to the puzzle that others don't. On balance, BYD is going to do awfully well, but Tesla still has the most powerful brand in the world. As the whole auto industry goes electric, it's going to be fascinating to watch.
Steve Wesley, we await that call. So many investors. And Tasha, thank you as well.
Yeah, that Model 2, as folks have been calling it or referencing it, is going to be, I think, key on the call, whether we get some details on that. That next generation platform or vehicle.
And how investors feel about the multiple in this environment as we're still finding our way. Now, IBM shares staying higher, about 5%, still above 180 in overtime. Up next, we're going to get reaction from an analyst who just upgraded the stock to a buy rating last week.
So
is meal on board.
Alrighty, so whoops, I did not mean to pause that. It looks like a lot of you guys are, most of you guys are kind of like, earnings were kind of what was expected. Like I said, the stock's going to move huge on the conference call. The conference call is what actually matters here. This earnings release, the numbers, no one freaking cares about that in terms of stock price. It's all going to depend upon this conference call coming up here in a bit. This is what's going to actually move the stock huge tomorrow, is based upon what they have to say about margins, what they have to say about the launch of their next vehicle. Is this something we could see this year, next year? The problem is Tesla's right now trying to ramp Cybertruck, right? So they're going to have their hands full for pretty much this entire year with Cybertruck. So the question is, could they go back-to-back years launching a new vehicle, right? That's difficult. I don't know. I don't know if they could go from this year ramping Cybertruck to then next year they ramp the Model 2, right? back-to-back years, it might be difficult. That might push out to 2026 or 2027. That's something I'm a little concerned with, is the fact that they would launch next year. I don't know. We'll see. We'll see when it comes to that. But right now, clinging on to 202 here after hours. Now, I want to go grab my iPad here in just a minute, and I want to grade these earnings for you guys across the board and kind of let you know what I was thinking here. As far as the pictures went, I thought the pictures were cool. Tesla wraps, that's a huge opportunity for them. Megapack production line, that's a big growth vector for the company. Cybertruck production line, great to see there. Cybertruck in general. Right here, I thought this was just cool. Fremont factory produced nearly 560,000 vehicles in 2023, an all-time record. I remember when the debate was Fremont would not be able to produce more than 250,000 vehicles. I've owned Tesla that long that I remember that was the debate. Like, oh, Fremont's going to max out at 250,000. That was a thought. Then it was, oh, Fremont's going to max out at 400,000 vehicles. There's no way they could produce more than 400,000 vehicles a year at Fremont. And then to see them last year produce 560,000 vehicles at Fremont is unbelievable. Because, like I said, I remember when the debate was 250, 400. So that's a funny thing. That's what gets forgotten with Tesla many times. These old debates of like, oh, Tesla can only do this, it can only do that. And then the company blows through it. And then everybody forgets that was even a debate back in the day. Model 3 refresh is very exciting. That looks great. Model Y, best-selling vehicle globally in 2023. Holy smoke, that ain't no dang jokers, folks. Phenomenal. So, energy storage, solar. Energy storage business looks like pretty respectable growth. Energy storage deployments up substantially in 23 versus 22. Unbelievable, right? Look at the services and other business, and look at the gross profit. This is really important. One of the most important things that I don't think nearly enough people are going to pay attention to is this little thing right here, guys. One of the most important things you could pay attention to when it comes to Tesla stock is right there in front of your face. Services and other gross profit. This was a massive drag on the business for years. It is no longer a drag. Now it is something that's helping pull up the business. I mean, look at it in 2019, for instance. Over $500 million in loss from that segment, right? And now we're sitting at close to a $500 million gain there. That's going to go to billions, folks. In my opinion, at least. That's going to go to many billions of dollars. And so we're at a whole different point in time now with this company. It really just started last year where we flipped to actual, positive gross profit here. But now we're going to start to scale epically over the next, I would say, 3 to 5 to 7 years. And that's a component that, it's the same thing that happened with Apple. Not enough people paid attention to Apple services. Now who doesn't pay attention to Apple services? Everybody pays attention to Apple services now. I mean, what a difference, right? What a difference. So, same thing will happen here. Cumulative miles driven with FSD beta in the millions. Wow, an exponential increase, obviously, there. Cost of goods sold per vehicle. Ooh, I like this one. Look at this. Cost of goods sold per vehicle is down to, it's going to likely go into $36,000 here very shortly. Well, a lot of that's probably going to depend upon Cybertruck, too. That could screw up this graph. But that's pretty cool. There. Wow. All graded up. Here we go. I don't think you guys are going to like this grade, but I gotta give it to them. So it says they have buy orders at 195, 185, 175. Doubt it goes that low, though. Wow. Yeah, they would need to be a really bad conference call here in a bit. HPE hit by Russian intelligence group that hacked Microsoft. Oh, interesting. All right, here it is, folks. It is a D-. Yes, a D-. D- there. Obviously not great to see the company hardly growing revenues. Gross profit fell dramatically, about 23%. Obviously, income from operations down nearly 50%. Operating expenses were up 27%. You never want to see operating expenses up that much when revenue is hardly growing. Adjusted EBITDA down 27% there. Net income down 39%. EPS on a non-GAAP basis, diluted basis, down 40%. So definitely a rough earnings, as we pretty much all expected, just to be quite frank in regards to that. I bet you they're going to have Dan Nathan. Who wants to place a bet against me right now?
Spring ready to bounce higher. Do the traders agree? We will find out. I'm Melissa Lee, coming to you live from Studio
Oh, who's going to be there?
On the desk tonight. Tim Seymour, Karen Feinerman, Steve Grasso.
No, they don't have them.
Fair lead strategies. And we start off
No,
with Tesla
Dan
trading at
Nathan.
levels not seen since
No
early
way.
November. Close to losing the $200 level. The
No
EV maker
way.
saying EV sales grew just 1% in the latest quarter. The call kicks off later this hour. CNBC's
Man missed
Phil
his
LeBeau
big
joins
opportunity.
us now on the numbers. Phil.
The numbers are not encouraging if you were a Tesla investor. They missed on the top and the bottom line. We'll go over those first of all. Company earning 71 cents a share. The street was expecting 74 cents a share. Revenue coming in a little shy of expectations at 25.17 billion. Street expecting 25.61 billion. There is some encouraging news in terms of gross auto margins excluding zero emission vehicle credits. The expectation was for 15.7% as that gross margin figure. They came in at 17.1%. So better than expected, actually better sequentially than the third quarter. So why are people perhaps wringing their hands a little bit and wondering what the future holds for Tesla? It's because the company is not giving guidance in terms of 2024 deliveries. In fact, the company did say in its release, and we'll get more from Elon Musk in about a half hour, hopefully, that deliveries this year will be notably lower than the rate of delivery growth in 2023. The words notably lower, those are Tesla's words. Just for a point of reference, the company's delivery rate increased by 24% in 2023. That was down from 40% in 2022. So the question becomes, how much will they grow this year, Melissa? That's what people will be focused on, especially when the call starts at 5:30 from Elon Musk. Are we talking about a 10% delivery increase? That would get them up to 2 million for 2024. Are we talking about something a little more than that? The estimate on the street was for 2.1 million. It is that open-ended nature of notably lower that is certainly going to be front and center during the conference call, which begins in a half hour.
Yeah, if they can quantify notably lower, I feel like this is sort of, the automotive gross margins ex credits was much better than expected. A lot of people went into this quarter thinking that's what it was going to be all about. And for 2%, 1+% beat, that seems significant. Also, free cash flow for the quarter, that was also significantly higher than expected. So you had sort of puts and takes in this quarter.
True.
Absolutely. But everybody also went into this quarter, Melissa, assuming there would be guidance in terms of delivery growth rate for 2024. Nothing, and just the words notably lower, it leaves it open for interpretation. And right now, the Bears are interpreting that as bad news.
Yep. Phil, keep us posted. We appreciate it. Phil LeBeau. By the way, they say it will be notably lower because the team is going to transition to the next-gen vehicle platform. So that's the reasoning behind that, for what that's worth. What do you make of the quarter?
Well, first of all, just to the stock's performance after hours, I'm kind of surprised it's doing as well as it is. I mean, that type of unclear outlook, but a negative outlook on top of, you can make what you want. You can twist the numbers. You're right. There's a lot to read into. But when you look at operating profit falling year over year, you look at 2 straight quarters where it's been under some pressure. You have some dynamics where they're saying, we are going to spend more on AI and robotics. And so the spend goes up at a time when earlier this week or last week when Elon Musk sent a bunch of strange tweets out there talking about how maybe he wasn't comfortable having AI and robotics as part of the structure if he doesn't have 25% control. All of this adds up to some uncertainty around some part of the business that I think was what we were willing to pay a lot extra for on the multiple. And so it's at a time when the growth part of the story, which like every Tesla bull will talk about that, is in question at a time when people are, there's some bigger issues issues. BYD, we know the headlines there in terms of which they overtook them as the largest. I don't think that's a big deal. And I think obviously the BYD cost structure and ASP structure very different than Tesla. But it's not an easy time. Stocks already had a lot of bad news priced into it. I actually think the price action here is better than I would have expected.
Questions around the growth part of the business for Tesla, but also the growth part of the business for the EV market in general.
Yes, writ large, right. And so I kind of look at it, I agree to your point about them talking about we're going to be transitioning to newer models. That's a big difference than notably slower for no other reason. Right? So we don't know exactly when or how. Sometimes they delay. Things take longer than they think. But I don't know, the more I've been thinking about Tesla and the EV slowdown, the more that I think they should be cutting prices. They should just be putting as much pressure as they possibly can on the GMs and Fords. You know how, whenever my husband and I watch one of those, action movies, they always leave the villain almost dead. They kick the gun to the side, right?
He can't get it there.
He can get it, of course. He comes back, you have to kill him again. And I'm just wondering, are they really going to try to just step on the throat of...
By the way, this is a family show. You're talking about stepping on throats.
I know, well, it kind of worked out. I really think that's sort of what's going on here. And they're saying, we can take the pain, we can afford it, right? The balance sheet's in good shape.
Plenty
we do have cash flow. And we ought to just, crush them
if they do step on the throat, then they give up the margins. And everyone was so...
But they're not giving up the margins, really.
Well,
automotive gross margins ex credits better than expected. Sequentially
better than expected. But if they go next level, step on throat, Karen's streaming Netflix movie, then you're going to have a problem on the margins sometime in the future.
What if you have fewer competitors? Then you have room to price.
I don't disagree with you. I'm just saying the price action was nervous about margins coming in when they dip below 20. So if now they pop to 17 and they dip again, and then you say more share, it's still going to be a problem. I think Tim touched on the valuation we've been paying for AI. If AI leaves the story, what is Tesla worth without that? And is that full self-drive? Does he go do it somewhere else and sell it back to Tesla?
How can he do that, though? I don't understand how he would be allowed to.
Well, the share structure, it includes one class of shares which can't be, retroactively changed. But I just think it introduces, as someone I felt biggest risks for Tesla over the years have been corporate governance related. I think it just introduces a lot more of that at a time when the valuation is tough.
What do you think, Katie?
The stock has been a real underperformer, so I think people were anticipating something like this, and maybe that's why it's not down as much as you'd think. But there's a key support level, 208 on the chart. Now it's below currently. But as long as that holds on a consecutive weekly closing basis, to us, that's actually a positive or sort of an incremental positive for a chart that already has lower highs in place. Neutral long-term bias, and of course, the other mega caps look much better on their charts from a momentum perspective. So it's hardly the best of the best. But if it does hold that 208 area, it becomes somewhat compelling to us for sort of a counter trend entry point.
And when you saw the price action right off of the earnings print, it traded down to the mid 190s, and that area is the October 30th level, 194 and change. That's probably real support in the name. I like it above Katie's safer 208. But you'd be willing to take a shot here against a 195 or so low. The main issue that I have is if they're introducing new models, you force people to wait for those new models. And if they price cut, you force people to wait for a price cut. They were having enormous price cuts. So you went out and bought a car, and then they were $15,000 cheaper in 3 days, 3 weeks. That just forces people to wait.
All right, for more, let's bring in Fast Money friend Gene Munster. He's a managing partner at Deepwater Asset
there he is.
Management. Gene, great to have you with us.
Munster.
What is your take on the quarter and your reaction to the stock move?
Melissa, this was the most sobering outlook that I have seen from Tesla when they talk about a step down, a notable step down in growth rates. I just want to put that in perspective. The street was looking for 19% revenue growth in 2024 for this year, and they said it'll be notably lower than that. So it probably comes in at 10%. When I see that, I think stock's down 5-10%. That was my initial reaction. I'm surprised to see where it is. The reason why I believe it's holding in is twofold. You highlighted the importance of the gross margin ex credits. I would just add to that, that's the first time in a year that we've seen that improve. And so that is a surprise on the positive side, especially given the ramp of Cybertruck, some of that investment. And second, I think the stock reaction speaks to the conviction of shareholder investor base. And effectively, this comes down to a very simple question is, do you believe that EVs are the future? And if the answer is no, that you think that this is going to take 20 years to get to electrification and autonomy, then you believe the stock should be down measurably, meaningfully, 10% more on this news. But if you do believe in the future, then this punky, soft guidance that they're giving for this year is going to ultimately prove to be noise, because everything that Tesla's doing, building out this next generation vehicle platform, everything that they've done in their investments in autonomy, all of that is coming at a time where traditional auto is stepping back from these. And so that's the question. If you believe in electrification and autonomy, Tesla's actually in a better position longer term. And I think that the reaction to shares speaks to the conviction, long-term conviction that Tesla shareholders have.
Can you help us understand, Gene, what this next-gen vehicle platform is and what that gives Tesla in the long term? I mean, we may see that step down in volume growth this year, but on the other side of that, if we see increased efficiencies, if we see increased output, this could just, you could smooth this year over and see the trajectory higher.
You'd see an acceleration back potentially. I mentioned the 10% for this year, but next year could be 30% plus growth. And the specifically is that this is a lower price vehicle, likely around a Honda Accord. A typical Honda Accord in the U.S. starts at $30,000. That's below the average selling price of a car in the U.S. at $48,000. And it's likely going to be a couple vehicles. One is a lower price car with a steering wheel, and then followed by a robo-taxi. And so that's what they're talking about. They need to build enough of a gap between the Model 3 and this lower price vehicle, not to create some confusion. So this is going to be, again, a measurably lower priced vehicle and compete with where the sweet spot of the growth in the automotive market is today.
Hey, Gene, it's Karen. Thanks for being on with us today. So I've always had trouble with, how do you value Tesla then? Put it all together. How do you come out with a valuation for Tesla?
So what I look at is where the revenues are going to be in 3 to 5 years. I want to revisit it after the call here, but think about what that revenue growth is going to be. I mentioned a step back up to 30%. And then I go and look at what other companies are trading at. The best comp is Apple. When it comes to hardware, software, services, I think that's most representative of Tesla. And so that's a 6 or 7 times multiple. And so when I put those two together, I can comfortably get to above a $1 trillion market cap for kind of that 5-year period. Again, I want to see what's going on with their commentary on kind of long-term growth. But that's how I get there, as I think about this as a revenue multiple relative to where the revenue is going to be in 3 to 5 years.
All right, Gene, we'll check in with you later. Thank you. Keep us posted.
Thank you.
Gene Munster conference call again gets underway in just about 18 minutes time or so. That next-gen vehicle, at one point in time, we thought the mass market would unlock all sorts of value. Mass market.
That's what it was.
It's going to be amazing. And here we are. When we hear about transitioning to that new platform, that's a negative on Tesla in the after hours. Why do you think that is?
If you thought that the Model 3 was kind of this Volkswagen for the electric vehicle masses, then yeah, you're disappointed. But if you're an investor, you're thinking about higher margin. You think about the cars that they can actually build for a price that they can sell them for. So it's a fascinating time. Margin stability was what I think investors wanted to hear. Forget some of the unclear outlook in terms of deliveries and whatnot. But I think back to the stock relative to the market. It's great having Katie here tonight to talk about some of those dynamics, but it's underperformed the S&P by 35% in 4 or 5 months, like massively. Here we are. We talk about the Mag 7s, and this is a stock that I think is being treated, and I think based upon the headlines, I also think all of these headlines are good for Ford and GM, and I'm long both, so of course I want to believe them.
So you mentioned 208 as a level. What happens if it's able to hold that on a weekly basis?
Somebody we got a Warren Buffett in the chat, folks. Warren Buffett in the chat. Somebody just gifted a subscription to somebody. Holy smokes, this ain't no joke. Social Demon is the Warren Buffett. Oh my gosh. Everybody put your hands out for Social Demon. Wow.
Probably to a pretty strong
Well
degree.
done.
Just maybe sort of the, release of that news, right? People anticipating it, worrying about it, and now there's less uncertainty, and the market tends to like that. But that 208 level to us preserves the range. So if it breaks down, then we're looking probably much worse than the October lows, I would imagine.
Wow. All right, let's get a check on the markets now. The S&P 500 notching another record close today. The benchmark index topping 4,900 for the first time ever. The Nasdaq also higher, while the Dow.
Before we go further here, so my belief has always been, somebody says, "What up, Lord Jeremy? I'm a big fan of your videos. As a newbie investor, I appreciate how you break down all aspects of the market." Thank you, sir. Oh, appreciate that. Thank you. I've always thought the next model for Tesla is going to be a two-seater, something kind of like a smart car, but cooler than a smart car. Let's just put it that way. That's kind of always been my belief. And the reason being is Tesla could produce that for very cheap, in my opinion. Probably make some great margins on that. And it would be perfect for robo-taxi opportunity. Drive anywhere. Drive in any big city in the United States of America and just, look around at how many people are in a car. And guess what? It's almost always one person, the driver. And if there is somebody else in the car, it's one other person. A second person, right? So there's no reason to have 5 seats in a vehicle when most of the time you're going to be driving just yourself or one other person, unless you have a family like myself and you got a bunch of kids and things like that. But like I said, look around. Most of the time it's one person in the car and a bunch of empty seats. That's what it almost always is. And so I think a 2-seat vehicle makes so much sense. I think Tesla could produce those for maybe 10 to 12,000, sell them for probably 20,000, and I think they would be huge hits. And it wouldn't just be a hit in the United States; it'd be a hit around the world, in my personal opinion. So, we'll call it the commuter vehicle, has maybe 175 to 200 miles of range. Oh my gosh, woo! I think that'd be looking so good.
Good afternoon, everyone, and welcome to Tesla's fourth quarter 2023 Q&A webcast.
Model Y became the best-selling vehicle globally, as predicted. The best-selling vehicle of any kind, not just electric vehicles, with over 1.2 million units delivered. The energy storage business delivered nearly 15 gigawatt hours of batteries in 2023 compared to 6.5 gigawatt hours the year before. So tremendous year-over-year growth, triple digits. I think we'll continue to see very strong growth in storage. As predicted, I said for many years that the storage business would grow much faster than the car business, and it is doing that. Free cash flow remains strong at $4.4 billion in 2023 in spite of record spending on future projects. So we had record CapEx expenses as well as record R&D.
True.
This brings us to 2024. There's a lot to look forward to in 2024. Tesla is currently between 2 major growth waves. We're focused on making sure that our next growth wave, driven by next-gen vehicle, energy storage, full self-driving, and other projects, is executed as well as possible. For full self-driving, we've released version 12, which is a complete architectural rewrite compared to prior versions. This is end-to-end artificial intelligence. So another bitnets, basically photons in and controls out. And it really is quite a profound difference. This is currently just with employees and a few customers, but we will be rolling out to all customers in the US who request full self-driving in the weeks to come.
Nice.
That's over 400,000 vehicles in North America. So this is the first time AI is being used not just for object perception, but for path planning and vehicle controls. We replaced 330,000 lines of C++ code with neural nets. It's really quite remarkable. I want to certainly say things with they should be taken with a grain of salt. Since I'm often optimistic, with I don't want to blow your minds, but I'm often optimistic regarding time. But our current schedule says that we will start production towards the end of 2025, so sometime in the second half. That's just what our current schedule says. There's a lot of lot of new technology, like a tremendous amount of new revolutionary manufacturing technology here. The reason I want to put this new revolutionary manufacturing line at Giga Texas was because we really need the engineers to be living on the line. This is not sort of a off the shelf, just works type of thing. I think we've got a good chance of shipping some number of Optimus units next year.
Stop. No. Stop.
So this is a brand new product.
Yeah, we're not. A lot
of uncertainty. When there's a lot of uncertainty and you're in uncharted territory, it's obviously impossible to make a precise prediction.
Yeah, we're not, dude. Stop it, Elon.
But we will be updating the public with progress on Optimus, every few months, and you can see that it's advancing very quickly.
Just to comment on the barrier, I think the barrier, and we've talked about this, is like getting it to actually do something useful. Like we can get it to walk around, we can get it to do things, but it's like that utility part.
You can already do some useful things.
But to making millions of these things, it's like utility. Got to get the utility up.
Elon just got owned on the conference call by his own man.
A smart robot that can that's capable of doing generalized tasks is what it will be. And in terms of doing, moderately specialized tasks, well, it can already do that. And it'll just get better through the course of the year. As we improve the technology in the car, we improve the technology in Optimus at the same time. It runs the same AI inference computer that's on the car.
Fired.
Tech training technology.
God.
I mean, we're really building the future.
Okay. I think that's all the time we have for today. Thank you so much for all of your questions, and we'll speak to you again in 3 months. Thank you. Bye-bye.
Thank you.
Alrighty, so let's see where we finished out here. It looks like it's going to finish out at about 197 in terms of after-hours trading here, roughly, somewhere around there. So it should finish after-hours trading either at lows or very close to the after-hours low, which means obviously the market's not super happy about what transpired there. So my opinion of the conference call is this one was better, in my opinion, than the last couple, which is a step in the right direction. I thought there was, obviously when you start talking about Optimus going into production and then, his main man there comes in and says we needed to do something useful. I mean, that was a step in the wrong direction. But overall, I definitely thought this was a better conference call than, was it perfect by no stretch of the imagination, but it was, I thought it was a lot better than the last few. If you've listened to the last few and you joined me for the last one I did on Twitch too, that one was, I would say borderline disaster. If not one of the worst conference calls I ever listened to. This one was a lot better than that. So I thought we stayed on track for the most part outside of the whole Optimus thing. And so I liked a lot of what was said there. I was taking notes as we were going along, and I'm gonna go ahead and prep right now a video for the main channel. And what I'll talk about in that video is I'll run through the numbers real quick at the beginning of it, but really what we're going to get into is about 10 different statements that came out of Elon Musk and the team there that I thought were really important. And I took notes of all those because all those are what really matters for the stock over the next several years. So, and I thought he released a lot of information that was pretty key, that was new information that we didn't really know prior to now. So, alrighty guys, that was a beast. I think I've been live on here for like 4 hours now or something insane. So I appreciate y'all joining me. Thank you so much for being here. Thank you for following. Thank you for being subscribed. I will likely be doing my next live stream next week when Meta and Amazon report earnings. And then we'll likely do a PayPal earnings live stream on here because that's going to be huge. The viewership might be even higher for PayPal's earnings than it was for Tesla today, which is saying something. Meta and Amazon earnings, I think they're also reporting the same day as Apple, I believe. I can't quite remember. That's going to be a huge day as well. But and then we'll see about Palantir. We'll see about Fubo and stocks like that. All right, guys, much love as always. Appreciate you joining me. And peace. Have a great day. See you on the main channel a little later. Give me like 2 hours, maybe 3 hours.